Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Wednesday. Happy hump day, baby. We're halfway through the week. Got the Fed. Yeah, they're all holed up in their conference room, allegedly talking about whether or not we're going to raise rates, lower rates, or they're going to put some more dots on a chart. And how many rate cuts is it going to be? No one's talking about rate hikes, Inflation's coming back around, but we can't afford to do any. But anyway, we got a great show lined up for you today, more than ever. We've dubbed this the year of chaos, and man, March Madness has already started. Right, we had the play-in games now last night, and well, there is madness happening. And it's not in a good way. We're going to talk about Donald Trump and what is going on in the case in New York where they're saying they're going to seize his assets. This is not about Trump. I just want to tell you this right now. This is about what's coming. Okay, this is about the government going after people's assets, seizing people's assets. This is stuff that we like to claim, right? Well, that happens in Russia, right? That happens in Venezuela, right? That happens in Cuba. No, it's happening right here in America, and you better be worried about it. You better take heed, because we're watching as the government has become so massive. I mean, think about this. Budgets of over $7 trillion. Joe Biden wants to raise taxes $7 trillion over the next decade, right? I mean, and still, these are drops in the bucket type stuff. Did you learn anything from COVID? Did you learn anything from the financial crisis? Remember, too big to fail. Did you figure out what they put in that Dodd-Frank bill that said that they fixed it all? Do you know what they did? Really? Do you know? Because obviously they didn't fix it. I mean, look at what happened with SVB, Silicon Valley Bank. Look at what just happened with New York Community Bank. Yeah, they got saved by Steve Mnuchin, but they didn't fix any of those problems. What they did do in all of that legislation was make sure that the next time when it gets to be the big crisis, they'll take it from us. That's what they wrote. They will go after the depositor. Period. That's really what was in the law. Got to remember that we were all mad. Oh, you can't bail these banks out. That's a bunch of crap. You didn't bail out the homeowners who all lost their houses. Well, they heard that. It's now called the bail-in. Do you know what a bail-in is? Pretty simple. It's the depositors. And what does this have to do with what's going on in that farce in New York with Donald Trump right now? I'll leave it to Kevin O'Leary. You guys know that guy, right? Shark Tank guy. He's always on TV all the time, right? He's one of the cheerleaders of things. But he has been going crazy because he's warning us. What a great message to send all around the world. And he was doing this on CNN. He said that to claim where no money was lost, there was no fraud here in the context of actual people losing money. Right? Usually that's what fraud is, right? Fraud. Hey, you basically took people's money and you lost it all. No one lost any money. This may be great for the Attorney General, but this is not good for America. And I like this line, too. Forget about Trump, he said. Do you think this is good for business in New York? Do you think this is good for business in America? To take a law that we use to protect people against buying refrigerators at an overpriced value decades ago. So this is, again, they took a law that didn't even really apply to this to try to, find a loophole, and then apply it against an individual, and then talk about seizing his assets like we are Venezuela or Cuba. This has absolutely nothing to do with Donald Trump at this point. This is an attack on America, and I don't know how you can look at it any other way. Capital comes to America because of the stability of the justice system. And boy, let me tell you right now, the government is sending a message loud and clear. We will use any law, we will use anything to take your assets if we deem it necessary. That's really what we're talking about here today, Jason. This is incredibly dangerous stuff. At the same time, we're talking about, hey, we've seized Russia's assets, we're going to liquidate those too and use that for Ukraine. America's in a very, very dangerous place. When we get back, though, I'll get Jason's thought on what just was talked about right after this. 800-951-0592. A quick look in at the markets. The Dow is up 60. The S&P's up 5. The Nasdaq's up 2. The 10-year note, 283. Oil's off a little bit at $82. Almost got to $84 yesterday. Crude oil inventory reports not good. More big drops again in gasoline. So we're going to keep watching that. Gold's up. Prices are up. I don't know, maybe gold at one point was up like $8-9. I was like, what, did someone from the Fed already tell them what's going to happen? I don't know. But right now, gold's up a couple of bucks here, $21.62. Silver, $24.96. And we talk about diversification. Talk about how important it is. Think about what we just talked about with what's happening with seizing assets from somebody that didn't lose anybody's money. I mean, gosh, they didn't even go after Bernie Madoff like this, right? And that guy actually did it, right? I mean, he finally went to prison after a little while, but I mean, this is something that Kevin O'Leary just lets you know. Times have changed, and not for the good. This is what happens, right? The desperation of government has set in here. Be very careful with what you do with your money. That's why we talk about, hey, don't have it all in one place. If you still need to be building wealth, check out Y Refi, because it's not correlated to the stock market at all. Doesn't care about Jay Powell. Doesn't care about Letitia James or New York prosecutors or liberal judges or any of these other things. Up to 10.25% fixed rates of return. You can use it as an income source. You can pound your money daily. You can do whatever you want. There's no fees. There's no BS. If you've got $50,000 or more, I encourage you to check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YREFI24. But, Jason, very strong words coming out of Kevin O'Leary, and not about Trump. Forget about who it is. The fact that the government thinks that this is acceptable, sending a message to everybody else. When you think about it, hey, listen, is America now any different than Venezuela or Cuba or Russia. The Chinese don't even operate this way.
I don't know. I see a lot of humor, actually, and when somebody tries to separate America and how they do things versus Venezuela, Cuba, or Russia. I don't see how many of these countries act differently. There's one difference. Russia, Cuba, Venezuela, especially Venezuela, Cuba, they just do it, and they just say they're going to do it. They're honest about it. America has to have the illusion of freedom, but they do the same thing. This century, the 2000s, have showed us all kinds of abuses from the United States government. You know, look, we're going to invade countries because of weapons of mass destruction, because of 9/11, which is completely an inside job. Yet the housing crash, when the regulators and the government allowed these banks to buy these assets which were toxic, and they should have been, you know, B or C or worse rated. Then you have COVID and the nightmare of that false emergency, and how they shut the whole place down, and they made people wear masks and get vaccinations. This doesn't surprise me at all. And then the fact that it's Trump is actually pretty funny, because Trump is a proponent of a civil asset forfeiture and taking property that's being unused by somebody else. He's even when he was running for election in 2016, talked about how he was a big proponent of this. So the fact that it's happening to him is kind of humorous. It's Trump will admit before anybody else he's a businessman. He goes by the rules, you know. And if this is what's allowed to happen that you bring to the air, Joe, then Trump's going to have to find a way to legally fight it. If this is somewhere legal, it shouldn't be legal. It's not constitutional, but that's an old document that we don't really, we don't adhere to that anymore, Joe. So. I don't see much different as far as these communist dictatorships and what America is doing. This, Ed Snowden in 2013 told the whole world that the CIA, the NSA, they're spying on every country and every citizen across the world, and everybody bought more smartphones. So Joe, it's people are getting what they've earned, which is they like the safety and the comfort of living under their federal government. And you're right, Joe. We better watch out where your money is. You better watch what you're doing and be very careful what steps you take, because, the rules are changing on the monopoly board. You think you know the rules and how to win the game, and about the moment that you might start to win, someone's going to change it on you. So I'll keep going back to it. Gold and silver is one of those things that no matter what they change, you're holding it privately how you wish, and nobody else knows you have it. Even if there's a record that you bought it, there's no record that you still possess it. It's not a digital asset, Joe.
Yeah, and it's something where when we look at this, I don't think a lot of people are connecting all the dots here and how significant this truly is. And the fact that this has been, not only has it been allowed, let's face it, half the country probably thinks this is great. Right? Yep. Because they don't like the guy.
Yep.
Right? That has nothing to do with it, whether you like it or not. What we're definitely seeing now, this is something where all people need to be aware that as government gets desperate, right? This is what happens. Right? They extend power well beyond what would be considered a stable government. Right? This is like Kevin O'Leary was saying. This isn't supposed to happen here. This is why people want to invest here, because that doesn't happen here. But now it does. And it's been happening, especially since, this millennial. It just seems like it's gotten on steroids, hasn't it? Ever since they figured out, fiat money's not different this time. We can't pay off the debts. All of the deficits explode. Yesterday, think about the ridiculousness of these predictions coming out of the Federal Reserve and our government as far as what budgets are going to be and what the economy is going to look like. And now today, everyone's going to, oh my gosh, where are they going to put some dots? Do you know that they have not raised rates since July? Now, they told us Well, it's a lagging effect. Right? Remember that, right? We gotta take a pause. We gotta take a time out. Because it's a lagger. Well, I mean, it's March. Inflation's getting worse again, not better. But once again, is the Federal Reserve going to react? No. Matter of fact, I will guarantee it at some point this year, the Fed is going to be cutting rates, and it doesn't matter one damn bit about how high inflation is. How about the CEO of Bank of America, Moynihan, talking about the Fed and not to push the public too far? This is how scared the big banks are. Saying that the consumer is starting to slow down. And these higher rates are having a mitigating effect, but it's much of the much anticipated slowdown of the economy. But he's warning, believe me, it's coming. See what we have here? Is he talking about, my gosh, inflation is coming back? No. Is he talking about wrangling inflation back to its 2% target? He goes, if we were sitting here last year, our team was predicting a recession somewhere early this year. They took that off the table, and now we say it's going to be sometime later. But the Federal Reserve better not raise rates, right, Jason? You better not fight inflation. Right? Because if you do, then we're going to have this big problem. And I think this is something where everybody needs to be aware. Goldman Sachs has already come out and said, listen, sooner or later, the Fed is going to drop this 2% inflation thing. And Jason, I don't know if they're going to put a number on it. Goldman's putting a number on it saying, hey, listen, everyone better get used to 3 to 4% inflation. That's going to be, I guess, the new normal.
Well, the year-over-year CPI has been in the threes for a while now. I mean, it's been sitting there, so it's kind of like, and if you look at the last three year-over-year CPI numbers, it's very, very controlled. It's that even though it got really high and it seemed like it was out of control, it really sure seems well under control if you want it to go up. It really seems like what was done during COVID was, it's COVID's fault. It's COVID's fault. Let's print all the money. It's COVID's fault, right? They saw the problems with the banks in 2019, and I think they saw they had no real place to go, and that maybe they can inflate their way out, print the money, here comes the inflation, raise the rates, and leave them up. And, hey, we're going to start raising rates slowly over time. People are going to have to get used to this as we go into a cycle of higher rates and higher inflation. And it's here, Joe. It's here. I mean, it's if you look at the last 3 years of year-over-year CPI, the inflation, it just looks controlled. It looks contrived, like somebody planned it. And I think what you just said is exactly right. You know, I don't know if they'll even speak a number. I think speaking a number about where inflation is going to be from now on is a bad idea right now. I don't think the public is ready for it. But if inflation spikes and then they magically raise the rates again and then control it, then they might be able to say, well, 3 to 4. I know it's at 5 or 6 right now, but I think we're going to have a permanent 3 to 4. You know, when people are really hurting, Joe, you know, then they'll do it. And right now, recession. Well, how do you have a recession if there's still people working, prices on assets are still going up, and there's not a lot of pain and suffering for the big companies? To me, the inflation is going to get a little hotter, and I don't think we're going to see inflation go away. So they can't lower the rates. They're going to have to raise them, Joe. Inflation's going to make them raise rates maybe later this year if that's where we're headed.
Well, Goldman Sachs says, forget about it. They said that the 2% target rate is no longer viable. In other words, the Federal Reserve does not have the ability or the wherewithal to get back down there. Goldman's saying that because of all the endless money printing, because of the size of the debts, the Fed's next big debate isn't going to be rate hikes or rate cuts. Its next big debate isn't going to be quantitative tightening or quantitative easing. No. Goldman Sachs says their real next big debate, rethinking the neutral rate. Goldman Sachs says, why don't we just start penciling in 3.5% as the new neutral rate. We argued last cycle that the long-run neutral rate was not as low as widely thought. And so what are they talking about? Well, you know when the Fed was saying we have a 2% inflation target after the financial crisis, and then they were just so upset. God, we just can't get to 2% inflation, Jay. They couldn't do it, right? It was 1.6 and 1.8. I think one time they even said 1.3. Of course, Goldman's like, well, that really wasn't true, right? Because they're really not calculating actual inflation. But nonetheless, guess what? Get ready. Your money's going to get devalued even faster. We'll be back. 800-951-0592. Joe and Jason on this Wednesday. We're going to get this Fed announcement and a press conference later in the day. Right now, the market's very quiet, pretty flat here, not a lot of movement. We'll see what they say. And again, here's what we know. They're not raising rates. That we know. The question is going to be, how many rate cuts are they still anticipating? Inflation be damned. And by the way, just get ready for inflation to be the new 2% target. And I said this when the lunch lady Janet Yellen and her cohort Ben Bernanke made this number up. Now remember, they just made up 2%. There was no, great economic theory or textbook behind it. But they just try to sell it as what a great thing. And 2% is nirvana, right? One of the reasons why the housing crash caught them all off guard. Well, when we devalue the money every year, right? So every year, housing should just go up a little bit, right? A little bit. Here's the thing. Prices are going up way more than what they say the inflation is, which for me tells you it's going to get worse. I hate to say it. I want to be wrong. But when you look at what Goldman was talking about, deficits way bigger than anybody imagined they would be. The amount of debt that has to be rolled over on top of all the debt that has to be newly issued. This is the first year ever. It's going to be over $10 trillion in a single year. And it doesn't get better. They're saying that alone is worth a point to a point and a half of higher inflation forever. And this is the thing when you start thinking about what we were talking about earlier with the government seizing assets, the actual language inside of Dodd-Frank and what it actually means. People better be ready. And that digital currency, despite the federal, no, we don't need it. Yeah, they do. And it's coming. And I hope you're prepared ahead of time. Got a couple of good specials for you. We are sold out of the Libertads. We are sold out of the pre-21 Morgans that we had been running. Right now, I've got 2 quarter bags of quarters left. Remember on Monday we had 7. There's 2 quarter bags left. $4,750 on the 2 quarter bags that remain. So if you want to buy both of them, then you're looking at $9,500 if you want to buy them both. That is a great price. It's like a little over $1 over spot. That's barely like over cost. When you think about utility silver on the gold side of things, prices, get ready, guys. Prices are rising. I'm going to say this right now. I have the right to change the price of the special after the Fed announcement. If it goes, we could see gold tear higher here. We could see it do nothing. We could see it possibly go lower. I doubt that, but it could. So we can change it. But before the Fed announcement, it's going to be $10 liberties, 1 through 19 at $11.75. If you want to buy 20 or more at $11.60, I'm sorry, 20 or more, $11.65, 50 or more, $1,160 at 800-951-0592. That is the old 1866 to 1907 $10 Liberty gold pieces, half ounce of gold. Right now, again, cheaper than 20s right now. So I like the 10. You know what? For me, hey, listen, I want to be as private as I can. I want to be able to buy, sell, and trade as much gold as privately as I can. What does that mean? Well, I don't want to be 1099. I don't want to have to, show you my driver's license and give you my social security number. I want to be able to buy it, sell it, and trade it and walk in and out of the door. And that is you only can do that with one thing, the pre-1933 U.S. gold. And, hey, it's cheaper than like a half-ounce gold Eagles, right? So really good value here, $10 liberties, 1 through 19, $11.75, 20 or more, $11.65, 50 or more at $11.60. And then the 2 quarter bags of quarters. By the way, you're looking at each one of those bags got 1,000 quarters in it. Each one of those quarter bags, $4,750 at 800-951-0592. And Jason, as we continue to watch here, everybody's talking about, especially when you look at these big banks. The Fed really, hey, you can't fight inflation anymore. Everybody better get used to a lot higher inflation price. And Goldman Sachs, think about it, they're talking about a 75% increase in the inflation target.
Yeah. Remember they changed how they calculated it and they took 50% of it off? It's just a game. It's just mind games is what it is. And they're just trying to, let people down easy by just giving you, the soft way of saying you're going to get stolen from even more. Because really, we've said it before, if you own things like gold and silver, assets that will hold its value during inflation, you're going to be okay. And there's a lot of very wealthy individuals that are holding a lot of assets. Inflation doesn't hurt them as much. They still have to eat the same amount of food and consume the same amount of water and supplies. But a rich person, a poor person, on average, they consume the same amount of stuff. So when gas prices go up, the rich guy doesn't worry about that. He just takes a look and makes sure that his portfolio is keeping up with the inflation. So when they say, well, inflation's going up, well, all the rich guys are just going to make sure they're going to check all their positions and make sure stuff's going up. Well, that's what's great about gold and silver. Gold and silver is going to go with the inflation. A lot of times it's a leading indicator, so it'll go up before the inflation hits. But regardless, gold has been going up ever since this fraudulent, crooked bank ever got put into place over a Christmas holiday under the cloak and darkness of a secret meeting, right, Joe? Gold is doing its job. There's only so much a crooked banker can actually accomplish. They can't just decide gold is going to be cheaper just because they want it to be, Joe.
800-951-0592. Jason and I will be right back. 800-951-0592. Fabric and crafts retailer Joann's. My wife used to go there all the time, especially when our kids were younger. Filing for bankruptcy, saying that they could no longer sustain the debt load. It's a Chapter 11, unfortunately, liabilities of $1 to $10 billion. They said that they're trying to restructure. They're going to obviously close a bunch of stores. We'll see how many they end up with. They got 850 stores nationwide, and junk bond defaults. We haven't talked about this in a little while. Surged massively in 2023. The trend continues to get worse. It is now at a pace not seen since 2008. So this is companies that are below investment grade, which is unfortunately a lot of the markets. Companies selling low-grade debt now ending up in default. Corporate bond defaults increased by 80%, and saying that outsized debt burdens set up for even more defaults, Jason, in 2024, and essentially seeing this escalation from the lows of the summer of 2022. Now we're all the way back to 2008. We're back to the financial crisis, where we're seeing all of these companies that were barely hanging on hitting the bankruptcy button.
Well, I mean, you need customers for your business to thrive, and if the customers are too busy spending money on food and rent, energy, and other things, they're not coming to frequent your establishment unless you're into one of those markets. Are you a grocery store? Are you a landlord? If you're a property company, you might be doing okay, because all your costs get charged to the consumer, which has to have energy and a place to live and food. But other than that, Joe, communications and transportations are the next necessities. But if you're not involved in those industries, you're looking at hard times coming if you're not in a flourishing area of the country. More and more, I don't know if it's this show or if it was the Half Empty Cup of Joe, I talked about how thefts in nicer parts of some of these towns here in Colorado are experiencing all kinds of theft. Well, what does someone do when they don't have enough money for the necessities? They will do it, and that comes naturally. If you can't eat or have a place to stay, you'll steal something, sell it, so you have the money to buy food and have a place to stay. So all of these things we've been talking about over the last year, I would say year plus, with the inflation coming in 2021, 2022, and with COVID and its nonsense, we've been warning how the after effects. It sometimes takes a couple of years, a dozen or so months, 18 months, and then these things start to actually show. When we talk about up to the minute decisions that are being made, Joe's right on cue with the things being said at this moment. But whatever Jerome Powell says today, it may not actually make a huge difference until 3 months, 6 months, or 12 months from now. That gives you time to start making better decisions. But Joe, a lot of people are just distracted. They think that hey, if I vote for this guy, or if the government can change in this way, if I talk about or elect a certain guy, that things are going to get better. That's not what you need to be doing. What the average person who's running a household needs to be doing is taking care of their finances. You take care of your country, the country of your home, your family, your finances. And Joe, these businesses are not going to do better. How can they do better in this environment? I don't see businesses doing better. I see businesses either hanging on by their toenails and their fingernails, or, like you said, bankruptcies. Bankruptcy. That's what a business does, right, Joe? You can't pay your bills. You can't do it. You file bankruptcy. You're done. It's over. And just look at anybody who's over the age of 40 can just look around. It's like, how many local businesses did you have when you were a kid versus how many local businesses do you have now? Kids don't even have anything to go do. When we were kids, Joe, think about all the stuff there was to go do on a weekend, on a Friday night, all the fun things there is. I always feel bad for Jack and all the lack of things there is to do, because that stuff doesn't matter when you need to buy food, buy shelter, and buy energy just to survive. So good luck to all the businesses out there. I mean, hopefully you can hang on through this next phase of just crash and burn, right, Joe?
Well, and again, I think what it's highlighting is the high cost is overwhelmed a lot of these businesses. Even just a small drop in customers is enough to push them over. And I think that's really, I guess, if you want to think about what Brian Moynihan was trying to say to Jay Powell about, hey, you can't raise rates anymore, it is just that. Hey, our businesses, a lot of these businesses, hey, if they lose, if sales go down 5%, that's going to be enough to put them under, right? They don't have enough to keep going because the cost, everything just costs so much more now. The fact of the matter is, I think a lot of this really was priced to perfection, right? Hey, we anticipated the consumer having oodles and oodles of government money forever, and they don't. And now that it's starting to slow down, all of a sudden, here comes bankruptcy filings. And where is the bankruptcy filing starting? Well, the same place it always starts. Look at where are the credit card defaults happening? Where are the auto loan defaults happening? Where are the bond defaults happening? It's all in the junk, right? It's the people with the lower credit scores. It's the people that were fighting to stay alive. They're not having enough to do it. And again, precursors of things to come. Boom and bust cycles, you bet. Inflation going away? Patriot Radio News Hour. Final segment coming up. 800-951-0592. Patriot Radio News Hour. Final segment here on Wednesday. Obviously, tomorrow we'll talk about what the Fed did and, all the talking points, all the nonsensical talking points. But today we've got $10 Liberty gold pieces, 1 through 19 at 1,075, 20 or more 1,065, 50 or more 11. Sorry, let me get this right. 1175, 1165. Right, that's how fast gold moves. Right, 50 or more $1,160. And then we got a quarter bag of quarters, $4,750 at 800-951-0592. And it's really simple. This is, I think, simple for everybody to understand. If you go $1 into debt, if you borrow $1 to get 40 cents, how long can that go on? Borrowing $1 to get 40 cents. Pretty simple, isn't it? Well, gosh, we're going to go broke pretty quick. That's where we're at right now here in the U.S. For every dollar this government is borrowing, we're only getting 40 cents. And it's getting worse and worse and worse. And now you have, Goldman Sachs, they're one of the big banks now, right? And all this stuff, and everyone knows the name. I call them Goldman Sucks. Saying, hey, sorry, how about, instead of 2% inflation, how about 3.5%? How would that be okay with everybody? No big deal. So every 10 years, you can lose 35% of your money. 35% of your purchasing power. We already know this is a house of cards. And somebody smarter than I said, all they've done is they put it on stilts, right? That's a really good analogy, right, Jason? Hey, we took the house of cards and we put it on stilts. What could possibly go wrong?
That's a pretty good analogy. Yeah, it always feels like there's just one leg to be kicked out and the whole thing falls, doesn't it? It always feels like it's that way. But It is leveraged for the very few to benefit, and for the most to hold everybody up. It's Yertle the turtle, Dr. Seuss, the stack of turtles holding the king up so he can be higher than the highest high. He can be above the clouds and above the birds, and at some point, like you said, the stilts, it just something happens, the back breaks on Yertle at the bottom, and the whole thing comes down. And we have that happen many, many times, and people need to get used to this. This is normal. This is written in. This is baked into the cake. It's supposed to happen. And until they change the entire system, which I don't see happening soon, you have to learn the system and then learn what you need to do inside of it. And one of the first things I learned is that you have to have savings. You have to have savings because there's so many things that can go bump in the night, and you need to be protected. And gold and silver is the way you save. You can have your 401ks or your stocks or whatever else you want to do. You can play around with all that stuff. But if you want to hold something that's a rock that's just going to hold its spot and be there when you need it, that's gold and silver. Yeah, you're insane to be happy with a bunch of digits in some savings account at your bank. You're just insane to have it there.
800-951-0592. Patriot Radio News Hour, wrapping it up for the day. Jason and I, we're coming right back with the Half Empty Cup.